Alright, so now let's proceed with 3.4, managing of current assets. So before we going further, okay, kita recap balik chapter 2, functions of financial manager, manage asset, right? Asset management. So inilah dia kita nak belajar, okay, managing of current assets. So in this managing of current assets, what we're going to take a look at the marketable securities. Current asset kita akan tengok ialah marketable securities, account receivables, inventory and cash. Alright. So why we must manage our current assets? Because we want to avoid from bankruptcy. Okay, if failure in this part, it may lead to bankruptcy. So that's why we must manage our current asset efficiently. Second, to facilitate the firm to operate smoothly and earn profitability. So these are the functions of managing current assets. So now let's move to the first current asset that is marketable securities. So marketable securities is an asset that can be converted into cash immediately. That is within a year. Example of marketable securities are treasury bills, money market, commercial papers, government bonds. So these are the example of bonds lah, bond certificate. Okay, so marketable securities have a low return. Return is lower as compared to other operating assets. So dia pun kita ingat lah, low risk, low return. Low risk, low return. Okay, marketable securities. So kalau you ingat balik low risk low return, financing policy apa yang menggunakan low risk low return? It is a conservative financing policy. Okay, yang balik conservative financing policy. Okay, so why people choose marketable securities? Because marketable securities act as a substitute for cash, because it easily converted into cash. Funny characteristic of marketable securities, dia easily to be converted into cash. That's why it can be the substitute for cash. Second, it can be a temporary investment. Daripada kita hold the cash tu, it's better for us to do the investments, so that we can get the return, even though it's lower than other investment, but we still will get the return in a small amount. Okay, so these are the rationale for using the marketable securities. So now let's take a look at the factors to be considered why we must invest in marketable securities. First, due to the financial risk, due to lower financial risk. So what is the financial risk? Financial risk is a risk of borrowers unable to pay on interest or principal of the security traded. Okay, itu ialah financial risk. So dalam marketable securities, financial risk lower. That's why people will tend to choose the marketable securities, to invest in the marketable securities company, willing to invest in the marketable securities. Second factor is interest rate risk. So what is the interest rate risk? Interest rate risk is a risk of the interest sensitivity with security maturity period. The longer maturity period tend to have higher interest rate risk. Maksudnya, the longer the maturity period, the more sensitive it will be with the interest rate. So that's why dia akan ada higher interest rate lah. Again, kita tahu yang marketable securities have a shorter maturity period. So that's why interest rate dia pun rendah. Okay, second factor is the inflation rate. So what is the inflation rate? Inflation rate is a risk of returns of financial instrument react with inflation. If the return of financial instrument increase with inflation, it shows that it has a low inflation rate. If the returns of financial instrument falls with inflation, it shows that it has a higher inflation rate. Itulah inflation rate. So next, the marketability or liquidity risk. The possibility of financial instrument to be sold in the market immediately. If financial instruments can be sold immediately, close to its market value, it has a low risk of marketability. Okay, since they're easy to sold, easy to be converted into cash immediately, so they are the low liquidity risk. Sebab dia sangat liquid, easy to convert into cash. Tak adalah masalah liquidity risk. So the last factor is the yield or rate of return. Rate of return means the reaction of risk and return trade-off of the financial instruments, which means that higher the risk, the higher the return, or the lower the risk, the lower the return. If financial instruments take longer time to be sold, it means that it have a high risk of marketability. Okay, so maksudnya since marketable security easy, basically sebab dia sangat mudah to convert, so dia takkan ada lah all these risk. Dia ada tapi rendah. Okay, so next we take a look at the types of Malaysian marketable securities and their features lah. So you can tahu lah apa types dia. You boleh refer to page 145 to 146. So example, kita ada Malaysian Treasury Bills, MTB. And the next we have Malaysian Islamic Treasury Bills, Bankers Acceptance, Promissory Note, Bill of Exchange, and Certificate of Deposits. These are the types of Malaysian marketable securities. So basically, ini je lah untuk marketable securities. You can tahu features dia, you can tahu types, and then you can tahu risk factors tadi tu. And sometimes you can bukan sometimes, ada juga dalam pasir ditanyalah apa risk-risk yang terlibat. Okay, apa maksud risk tu, so you can kenal pasti all those risks, right? So that's all untuk marketable securities. Next kita akan pergi kepada account receivable.